Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we shall be looking at the technical analysis on the currency pair, the Eurozone to the Great British Pounds. And of course, as usual, we shall be talking about fundamental analysis before we move right down ahead to technical analysis, which is purely what we're going to be seeing on the chart. Now, we have noticed that the Euro GBP has reversed lower from its near 0.8400 closing levels last Friday to fall back into the mid 0.830s on Monday. And the euro has underperformed as Western nations toughen sanctions against Russia, sparking fears of retaliation and energy supply disruptions. Now, euro GBP has reversed lower from its near 0.8400 zone closing levels last Friday to fall back into the mid 0.830s on Monday, and predominantly as a result of geopolitics related euro weakness rather than sterling strength. The EU, in conjunction with NATO allies, announced a raft of new harsher sanctions designed to topple to Russian economy for its ongoing invasion of Ukraine over the weekend. Now, amid fears that Russia might retaliate by, halting energy exports to the EU, energy prices in the region have spiked thereof, and triggering fears that the Eurozone economy might face near-term stagflation. Now, fears of economic weakness have seen the market participants reduce ECB tightening expectations, resulting in a sharp drop in Eurozone bond yields. And of course, that plus the fact that the Eurozone geographic proximity to the war in Ukraine likely explains euro weakness on Monday. So indeed, the currency sits at the bottom of the G10 performance table for the day, while sterling sits nearer to the middle of the table ahead of the Euro GBP Saturday close to the middle 0.83% and let's say 0.84-ish ranges. Now, the outlook for the pair is likely to more range-bound medium-term conditions, just as the Russia-Ukraine war and associated West versus Russia sanctions and global commodity price dynamics damage the near-term outlook for the Eurozone economy. The same can be used for the UK, even prior to start of the war, as economists already saw the UK economy as on a weak footing with large tax and energy hikes on the way in April, while the BOE Bank of England is very much expected to continue with near-term tightening in the coming months. Expectations for economic weakness will only hamper expectations for the BOE's Bank of England's terminal rate, which is ultimately a GBP negative. So ahead, geopolitics is set to remain in front of mind this week, though there are also plenty of calendar economic events for traders to keep an eye on. Following Monday's hotter than expected Spanish inflation figures for February, focus will be on Germany numbers on Tuesday, then Eurozone aggregated figures on Wednesday. So across the channel, there will be plenty of BOE speak to monitor with traders interested as to how policymakers react to the latest geopolitical developments and how this affects the rate outlook. Now down to technical analysis, purely what we're seeing on the chart now. Today's last price has been anchored at 0.8362, and today's daily change has been about minus 0.038%, and total daily change at minus 0.45%. And today daily open we have had it at 0.84, and on our daily trends we have a daily SMA to be at 0.8378, and also our daily SMA 50 at 0.838, while our daily SMA 100 at 0.8432, and daily SMA 200 has been at 0.8497. Now, what to expect from the market? We are seeing a pure downtrend here, and looking out for the most recent support zone after a touchdown of the touch up of the resistance zone at 0.8380. We have seen a flush down thereof, and we are looking out for the next most recent support zone, which is at 0.83052. And if after this, a possibility of a flush down more to the downside to break out of the support zone, which most likely is going to be on the book. So now if we're making an entry to this trade, and we are taking our trade from that exact point at the 0.830 zone, what we should be expecting from this trade is nothing less than, let's say, about 30 plus pips from that trade, which is good money. And with a high lot size, you're able to rack up good pips from that trade entry point. So at this point, to make an entry here and let it run up to this point at 0.83042, we're looking at nothing less than 30 pips and an extension downwards for the breakout of the support zone. We're leaving you at nothing less than 50 plus pips from that trade, which is good money. Now that's our technical analysis on today's currency pair, the Eurozone to the Great British Pound. Hello, good day, guys. Also today we will be talking about the crude oil, light oil, sweet oil futures, as we have been looking at the oil prices so as Ukraine conflict stroke supply concerns, and oil prices have surged on Tuesday as concerns over supply disruptions after Russia invasion of Ukraine and related sanctions outweigh talks of a coordinated global crude stocks release. So Brent crude futures has been up $5 point or about 5.25% to $103.11 per barrel by 11:45 GMT. The benchmark touched a 7-year high of $105.79 after the invasion began last week, while the US Texas, West Texas Intermediate WTI April crude oil futures were up at about $3.9, or let's say 4.8% at $99.63 per barrel. Now, the contract touched a high of $99.10 per barrel that previous day, ending up with more than 4%. Now, a huge Russian military convoy has approached Ukraine's capital, Kyiv, on Tuesday after talks between Russia and Ukraine failed to reach a breakthrough. Russia's economic isolation deepened as the world's biggest shipping firm, Maersk, on Tuesday said it would halt container movement to and from Russia. Britain and meanwhile have banned all ships with any Russian connection from entering British ports. The fragile situation in Ukraine and financial and energy sanctions against Russia will keep the energy crisis stuck, and oil will well above $100 per barrel in the near term, and even higher if the conflict escalates further. Right, Louis Dixon, senior oil market analyst from Rystad Energy, has said so much about the major oil and gas companies, including BP, Shell, and the rest of them have announced plans to exit Russian operations and joint ventures, while Total said it would not invest further capital in its Russian operations. Buyers of Russian oil are facing difficulty over payments and vessel availability due to sanctions from BP canceling fuel oil loadings from a Russian Black Sea port. Still, the market mood was held by the United States and allies discussing a coordinated release of crude stocks to mitigate supply disruption. That release could reach about 60 million to 70 million barrels, media outlets reported. Now, you can see that on the chart, the oil market is actually doing very well. And the breakout of the most recent resistance zone is giving an opportunity to make an entry into a new and better zone of the 103s, if not 110s zone. So now, at this point, we are looking for a safe haven to make sure that the oil market is still doing well as expected. So we are looking at a target of 110.35 and an extension to 115.70 zone. So if we were to make an entry at this point and let our trade run up to that point, we're looking at nothing less than 75 to 100 pips from that trade, which is good money. Now that's our technical analysis on today's commodity crude oil. I remain your host, Nick. Bye for now.